Suresh Kris, the CFO at Brigade Enterprises, is our guest. And of course, this is not on results. Suresh, the overnight announcement that you can get FDI for affordable housing, especially even for smaller units or cheaper units, does that materially change the game for you?
Yeah, good morning, Lata. Basically, the FDI investment into affordable housing has been talked for a while. Apart from the other points like reduction in the minimum area from 50,000 square meters to 20,000 square meters, and the cap rate from $10 million to $5 million like this. But still the area is only that maybe 60 square meters of the area, and out of which again 21 to 27 square meters should be the corporate area, and 35% of the units has to be committed to this, and 30% of the total cost should be committed to the affordable housing, 60% of the FSI area to be committed to the again affordable housing. These are the criteria which will be there, but one big positive is there is no minimum capitalization, or there is no minimum area definition into this. Maybe for Brigade or even for any other developers who are having a small land parcels which would not have been qualified for FDI earlier may qualify for this now.
But are they waiting to come? FDI, that is.
FDI into this may come. That's what I'm saying, because again some of the FDI companies, those who don't want to invest so much into India onto a specific project of those sizes, I think it is easy for them to come in.
Do you have any affordable housing projects? Are you planning to get into this segment in a big way? And have you seen any interest from foreign players?
We already have one, I would say, sovereign fund for our projects, and we have already entered into an MOU with, I would say, JC Singapore earlier. So that is already there, but presently we do not have any affordable housing as such. But again, going forward, depending on the market absorption, demand, and our involvement into developing into those segments, definitely will clarify more.
Okay, just hang in there, Suresh. We have Mr. Y.D. Murthy, the Executive Vice President Finance at Nagarjun Construction, NCC, also joining us. Mr. Murthy, your take. Will you need FDI in any of your EPC projects? Do you see interest? Is yesterday's announcement making things easier for you?
I think the government notification pertains to real estate developers and not for construction and EPC companies.
Oh, really?
And as such, we are not in need of any foreign investment in contracting business, which is our bread and butter business. We already have various international investors on the equity side in the project in our company. So they are already there supporting the management and supporting the company.
No, some EPC guys, Mr. Murthy, some EPC guys, notably L&T, have got into housing construction in some ways. You are not planning to do that?
We have a subsidiary called NCC Urban, which is focused on real estate development, predominantly the residential development. So that could be beneficial to NCC Urban. We have to examine how the notification is.
Okay. Mr. Kris, you know, a couple of players told us just a while back that the listed developers, many of them are not looking at private equity investments right now, because at least the ones who are getting money, most of them get cheap money, so the cost of borrowing is between about 12 to 15%, while the returns that PE investors would expect would be much higher. So what is the appetite like from the listed players' point of view, or from the developers' point of view?
With the developer's point of view, we could say that even though the borrowing cost may be from 11.5%, even up to 14%, the cost of equity may be much higher, there is no doubt about it. Whether it is structured dealing or even it is pure equity dealing like that. And the affordable housing, whether it will give that much return or not, I do not know. But those who are having a smaller land parcels can go into that, and who are not able to borrow money at these levels, but only the way out is only that FDI, FDI kind of this thing. They may go in for affordable, this kind of FDI into affordable, number one. Number two, the big question which I have apart from the affordable housing, which you can also throw some lights, which is a significant change from the earlier one, is that 50% of the development has to be done in 5 years or something from the approval date, which has been dispensed with now. So there are a lot of projects by other developers. It is not applicable to Brigade, where some projects or some companies where the projects have been abandoned for a long time, and that 3-year minimum lock-in period may not be relevant for them because the 50% of the area has been developed. But that condition has been taken out now. So it is only 3 years lock-in period, which is a significant move for related companies where they already struck up with the projects, maybe a large project like that. That is a significant move rather than affordable housing, because the affordable housing, like low interest rate and some benefit, all those things are there in play for some time.
Right.
But it has not attracted so much. By lowering the project size, I don't think so much of appetite will happen immediately in affordable housing.
So because of all these announcements, what do you think will happen to real estate prices? Do you think that they could move lower because of expected increase in supply?
There could be a demand for land which is less than capable of developing 50,000 square meters. That is one which definitely we can say. And somebody wants to do for any plotted development, that could also improve. So these are the improvement, not only for affordable housing, but definitely there could be increase in demand for land because of relaxation in the housing plots, where all this one has been taken out. Then number two, any FDI investment into the completed projects like running of a mall, shopping complex or business centers like this. So coupled with the REIT, when you now see even some of the FDI may be interested into those mall management companies, wherein there is no other criteria, because all those things has been into the automatic route where it was not pronounced earlier. So these are some of the reforms definitely will address. And the taking away the main condition of 50% development in 5 years from the approval date to only restricted to 3-year lock-in period definitely will give a lot of room for the existing FDI players who already invested, but they want to get out of those investments. That will give a new way. I do not know what could be the outcome now, because whether it is retrospective change or only prospective, which we do not know presently. So if it is there, then definitely a lot of players may go out of the locked up land, and some may come with good players because they want to reshuffle their portfolio with good developers in India. So that will definitely happen.
That's a very rich and comprehensive perspective that you have given us. Thank you very much, Suresh, for joining us with that. But let's keep Mr. Murthy for a bit more. Mr. Murthy, this is more questions to do with the recent developments in your company. The rights issue was oversubscribed, which is quite a positive. We haven't heard an infrastructure company being able to do that. Just give us the math now on debt, equity, interest outgo for this and the next year.
Yeah. We have successfully closed the rights issue. It is oversubscribed by about 14%. And of course, because it's a rights issue, we will retain whatever shares we have decided to allot. That is about 598.7 crores. And all these monies will be flowing into the company in the next 2-3 days, subject to allotment approval and basis of allotment approval by BSE and all that. So bulk of this money will go towards debt reduction in the parent company. It is already given in the object clause of the offer document, and accordingly nearly 500 to 530 crores of rights issue money will go towards reduction of debt by way of payment of the short-term loans, NCDs and things like that. And now what will happen is, because the rights issue 600 crores has come to us, the net worth of the company is going to increase to around 3,000 crores and the debt in the books of the company on a standalone basis is coming to around 2,000 crores. That is improving the debt equity substantially, around 0.6 or so, which is a good indicator. And also, because debt has gone down in a full year, I will be able to save interest of nearly 60 to 70 crores. That will add straight away to our bottom line. So from next year onwards, things will be very positive for the company, and also the macro environment is also improving. So we will definitely be on a good growth path as we go forward.
Do you get into the black? If I remember right, you made a small loss last time.
Yeah, first quarter there was a loss. It is a nominal loss, about 3 crores or so, mainly because of the high interest burden that we are carrying.
So right away, in this quarter itself, you get into the black, or you get into the black in the third quarter?
I cannot comment on that because our board is meeting on 13th November to consider the second quarter results. Then only the actual picture can be known to us and also to the investors and the general public.
Okay, what's the update on sale of projects? You had one with Sembcorp. Is there any more in the pipeline? Will we hear some more sale of BOT projects from you?
Yeah, the Sembcorp deal, we have already signed the documents and we got part of our investment back also. The balance amount is expected to come to us only after the Coal Ministry approval. That approval is also expected in the next 2 to 3 months because the new government is in place and they are also putting in place a lot of measures to see that power generation is improved. So in the next 2-3 months, that approval also can be expected, and then we get the balance money, which is nearly about 470 crores. That will be useful for our working capital.
No, I agree with you. What I was asking was, is after Sembcorp, are there any other BOT projects which you are looking to monetize? And as please.
We are looking at monetizing 2 road projects, that is Western UP Tollway and Bangalore Elevated Tollway. Discussions are going on with the potential investors, but this is a very early stage. I cannot comment much on that. Maybe in the next 12 months, at least one project can be monetized.
Okay, and finally, what are you hearing from NHAI? Are there any bids that are out? You seem to be the most solvent guy to bid. So should we hear of something? What can your order book look like before the year is out?
Yeah, our order book has been quite robust. And in fact, last year we bagged nearly 10,000 crores of new orders, much more than what we anticipated. It has come as a pleasant surprise, and also because the competitive intensity has come down to some extent, we were able to get these orders with better margins. In the current year also, the same trend is likely to continue. So order accretion should be quite good as far as the current year is concerned. As far as BOT roads are concerned, we have taken a decision at the board level not to bid for BOT road projects. But if EPC contracts are coming, we will definitely participate.
All right, so we'll leave it at that. Thank you very much, Mr. Murthy, for joining us.